Good morning, everybody. It's Chris from Serene Education with the 4 majors notes update for the 11th of April 2012. Okay, let's have a quick look at the 4 majors this morning. Start with euro against US dollar. Let's have a look. Okay, so what can we see? Let's have a look at the daily here. You can quite clearly see that we seem to see price using this 130500 mark here as a nice support. We've had a consecutive, this is a 4th consecutive bounce here on the support, and you can see quite clearly I've got it here in red. I've marked it. It's been here for a couple of days now. It's a genuine support. Notice we've had a lot of hesitation in this area in the past, and yet again, right hand side here, where prices, you can see quite clearly a lot of shorting going into it. However, a lot of indecision, spinning tops now. Yesterday was a spinning top, the day before was a spinning top, and almost a bullish orami on support. However, not moving any higher. We are topped out from the low over here to the high. We have these fib extensions to the downside, 23.6 above us, as well as the 38.2. 38.2 just above the 1600. Yeah, actually I think there's a resistance level. Price hasn't been above that area in the last 4 days, and you can see that the CTC on this time frame is red all across the board, and our moving averages are above price. So in a bearish downside trend, but a consolidative negative side trend. So we are negative. However, it's consolidating at 1305. We've got to see a breach of 1305 to see any further extensions to the downside. This 1305 is the 50% retracement area from the low to the high. This is the 50% here. You can quite clearly see there's a 50% retracement. So got to break below the 50 in order to see 61.8, and then ultimately way down here 12,6500 is our next target long term. Until such time as it does that, then there's a potential for price to actually start growing here. The longer it goes sideways, the more likely it becomes a nice concrete support. And if there's a concrete base, then you're going to find prices starting to build, i.e. more purchasing contracts, and we'll see a bounce. Ideally, we've got to see a break above 1600 to see any attempt at 23.6 here, just below 13300, and ultimately way back up here towards 1350, which is the institution moving average. So until now, we're seeing a consolidator. We need to see a decision candle. Too much indecision at the moment. We need to see a decision. So the decisions are bullish engulfing, break above the 38.2 here at 1600, or bearish engulfing, break below the 1305, which is the 50% to see 61.8, and ultimately way down here at the 126.5 as our next target for this pair. Next up is sterling. Let's have a look at the daily. You can quite clearly see the price has maintained the past week or so. A lot of consolidativeness under this area here at the 5900. 5900, very strong prior resistance and a support recently. Then we saw price revert to the downside, but you can see quite clearly we've had 1, 2, 3, 4 going into 4 consecutive days where price has actually found resistance below the 5900. Break above 5900 would see ultimately 1600 being retargeted quite soon. You can see price at the moment now on a daily trading above the 20, the 50, and the institution moving average. As long as price remains above the 15, the institution moving average on our daily, then we should be looking for further top side for this pair. The moment it gets below that, then we should be looking for negativity to continue. At the moment now, you can quite clearly see we've had a lot of attempts at 5900. We've had 2 breakouts in the past. One was a failed one. One really made a break above 1600, however failed to materialize and build onto that breakout after a spinning top breakout here. Broke lower again, a bit of a fake out here at 1600, very strong resistance level on our weekly time frame, and then settled back into this consolidative range below the 5900. Still above the institution though, guys. It's got to break and close lower than the institution to be still classified as negative. At the moment now, still blue across the board. Yes, there's some red, but it's still against the overall trend to the upside. So as it stands at the moment now, we should be looking for price to try and maintain this bullishness. Got to close higher than 5900 in order to build on that back towards the 1600 mark. If not, then we could go back into a consolidative range as it's done over the past week or so. So very, very important that we get to see price trading and closing higher than 5900 to see price building towards the 1600. Otherwise, look for price to find resistance here yet again, and if that's the case, look back towards the 158500 or the institution moving average as our next target. Moving on to the US dollar Swiss franc, good old Swissy. Let's have a look and see what's happening in the daily. After making all-time highs here at 96, well, short-term highs here at 96, we've seen price revert to this holding pattern here. You can quite clearly see since January we've been moving sideways in a consolidated pattern. Not a lot of giving away. However, hard right edge, you can see price is finding support just recently, early April, and then through the parts of April right up to now we can see prices extend itself. However, it's come short here at 920. Before 920, a bit of a resistance, yeah, and also from the low, from the high recently to the low we've had recently, we've had fib retracements. There we go, and you can quite clearly see the 23.6 here at 910 has been breached, and the 38.2 now is in play. We've got to see 38.2 fib retracement being broken and traded, support being found above the 920 here in order to see 50% at the prior resistance over here, just above the 927 mark as our next target. CTC on this time frame is all positive. We have both the 20, 50 and the institution moving edge below price. That's a good sign. However, you can quite clearly see that we've had lower swings, and you can see swing low. You can see price over here finding resistance here. So very, very important that we do get a break up 920 and a bullish close above that in order to cancel this potential for a resistance here or a swing low to form. And we could be targeting 910 quite soon, back at the 23.6. So it's very, very important that we do get a break higher. Otherwise, we get another shooting star here, another exhaustion. We're seeing price action at the low end of the candle. Could signify that we should see potential shorting opportunities arising from this, and we should be targeting 910 for this week in particular. So very, very important. We either get a bullish engulfing, take us above 920 in order to look at the 50%. And the 61.8 long term, or we could see a scenario here where you can see prices being squeezed. Okay, this downside trend being squeezed, prices being squeezed here at the underside of the 38.2 as well as this trend direct, and we could see price being forced lower with a bullish or bearish engulfing or a shooting star towards the 23.6. Very, very important. Wait for this candle to form. Anything lower than this would definitely give us a direction that we should be looking for bearish sentiment overall for the remainder of the week. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily. Price really been maintaining those, well, after getting off to a blast in February, after some fantastic non-farm payroll figures for the US market, we saw price really hitting higher, breaking a lot of support and resistance levels along the way. Coming unstuck at, however, at the 8400 mark, and since then pretty much been bounced back from these highs at 8400 back towards a fib retracement of 23.6. Found a lot of support at 23.6 for a long period of time, over a week or so, and then we saw price really breaking lower. Nice bearish engulfing here, and since then, price targeting the 38.2. And doing so, breaking yesterday's this price support here at 38.2, quite clearly at 8100. And now we're seeing price pulling back towards the underside of the 8100 and below the 50-period moving average. Now, if we can find resistance here at the 8100, then we could see potential for price to move lower towards 50% at the 80, just above the 80 mark. So as you can see here, we have red. However, the CTC still remains blue because overall we're still above the institution moving average. It's important that we, as long as we trade above the institution, then price long term is still looking favorable. Long top side favorable. However, we are seeing a pullback against the overall upside trend at the moment. So as it stands now, if price fails to break higher than 38.2 for today or the next couple of days, then we could see bearish sentiment creeping in, and then we would see another target to the 50% before we see 61 ultimately down here as being the overall. So as it stands at the moment, you can see swing lows dictating price action. Swing low yesterday's candle, bearish candle after this little indecision here, is a swing, and you can see it's punching lower. Now we've broken a very a price support and resistance level, which happens to be a 38.2 retracement, and in doing so, closing lower. However, on the Asian session going to the European session this morning, we're seeing price pulling back to the underside. A failed pullback here would result in a bear stance after price support becoming a new resistance, and we should see price targeting 50 and then 61.8. Break higher than that would see consolidation with an outlook potentially of this upside trend here just below the 82, what's that, the 82.40 being retargeted again. So very important that price actually finds resistance here to see a continuation lower. A failed resistance here would revert potentially for price to pull back, and then we could see consolidation again. So very, very important. We've got to see a nice resistance here. Price failing to break higher here than 38.2, which is the 8100. Failure at 8100 would result in price retempting these 50% and 61.8 to the downside. That's it, guys. Hope you have a fantastic trading day. Please ensure that you understand or make note of any news announcements that are coming out today that would actually result in price moving or speculative trading taking place. If not, make sure that you back up your trades with sound money management and keep it as simple as possible. Do exactly what I'm doing here. I know exactly what price needs to do in order for me to get another scenario set up, and I won't be doing any trading until such time that those things actually, or these parameters are met. That's very, very important. Yes, you're going to find that you're not going to be trading as much, but however, you won't be facing as many trades, and if you do find a trade, you'll be in the trade a lot longer and more profitable. Okay, so have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.